Good afternoon, everyone. Today I'm chatting with Peter Krauth from silverstockinvestor.com. In today's interview, we discuss the commotion going on in the financial markets and how precious metals tie in, as well as silver, where it could be heading this year. And we get into some of the recent errors that have been recorded over at the COMEX. First, I want to give a heartfelt shout out to First Majestic, one of the world's largest primary silver producers. If you follow our YouTube channel, you know we've built a strong community by breaking down mining earnings and major stories. Producing this content is expensive, and sponsors like First Majestic make it possible. We regularly get calls from billion-dollar companies wanting to tap into our audience, yet many hesitate to sponsor us. I'm especially grateful to Keith Newmeyer for understanding the challenges and costs involved. Their support enables us to deliver the mining insights you need, and we're truly thankful to have them as a sponsor. All right, everybody, enjoy the interview. Peter, it's great to have you on again.
Always a pleasure, Steve. Glad to be back.
So, since we last spoke, to say that the markets are a little volatile would probably be a polite way of putting it. Now, I wake up every morning, I watch CNBC, Bloomberg, even a little bit of Fox Business. I go through a whole variety of media from Financial Times to Wall Street Journal and try to get a sense of the tone that's out there. And I have to say that right now, when you watch CNBC in the morning, the messaging is that Trump is basically tearing apart the US economy, that there's absolutely no logic to what he's doing. And this is going to end very, very badly for the United States. That's not me saying that. That is basically expert after expert they have on. They had on Trump's top economic advisor, Peter Navarro, yesterday morning. I don't know if you caught that interview, but the panel was very, very, I'll say, contentious with Peter. Now, I'm curious, what are your thoughts about what's going on right now? What's going through your head when you look at the financial markets?
Well, obviously, a lot of chaos, a lot of volatility. Um, you know, uh, to some extent, I can't help but think that, well, within reason, this was a bubble already. I was looking at some research that showed that the markets up until this major sell-off were about, let's put it this way, they have only been they've been cheaper 91% of the time. So, these markets were very, very expensive, and this was a bubble that had to be popped. That was a very big pin to be popping the bubble. So I'm not saying that the sell-off is unwarranted, but it was due. Something was bound to happen, and this was a very big pin. And to be fair, I think that the this is definitely to a fair extent for different reasons. One, because these stocks were overvalued. Two, because this is a serious sort of change to the global economy and how markets work and how interaction between markets will work going forward. The one of the crazy things though is that it's markets are reacting, and yet as we've seen for the last couple of months, especially us up here in Canada, is that the U.S. administration's um, intentions can change like practically overnight. And so, all of what is said one day gets priced in perhaps within a matter of a few days. And yet a lot of that can be reversed again within a few more days, right? There were reports just yesterday that um, there might have been that Trump may have come out with a 90-day reprieve on most of these tariffs. And now he's saying he won't do that, but he's certainly willing to talk to anyone. So, these kinds of things just create a tremendous amount of volatility. And I think that what we see happening in precious metals, and obviously gold in particular, has reflected that. Now, what I will also say is that um, there was this expectation, right? There was this build up in terms of what was going to happen on April 2nd when Trump came out with his Liberation Day announcement with tariffs and so on. And so I do think that what we saw in the gold price leading up to that was a premium. And it was kind of, the old adage of buy the rumor, sell the news. And when the news came out, gold corrected. It's interesting that it hasn't corrected all that sharply so far. And I honestly think that there's probably not a lot more downside in it. It's playing its role as a safe haven. And to some extent, silver is doing that as well. It has certainly lagged. It hasn't kept up with gold, but to some extent, it's playing that role as well. This is really a new um, uh, his Treasury Secretary actually said last year before even the election, Scott Bessent said that we are he could see where the world was going into a global world order, right? And this that was somewhat of a foreshadowing of what's happened. There you can make a lot of arguments for what Trump has done. Um, and yet, because a lot of the countries that, I mean, he's put tariffs on basically all the countries, but some of the work I've read says that a lot of these countries have some overt, obvious tariffs on the US and some less obvious tariffs on the US. And that, uh, to some extent, what he's come out with and he's said and he's done in fact, does address a lot of these tariffs. Now, what we don't hear about is, and some, I think actually it was JD Vance who actually was one of the few in the administration that actually spoke about this recently, but said that, you know, at the same time, all these other countries that now have these big tariffs imposed on them have been at a disadvantage, and I think that's why they have set up these tariffs towards US products and services was because the US has the US dollar. And that's a massive global advantage that has put these other countries at a disadvantage. And so, these two things have been somewhat offset. But I think that it has led to U.S. debt that's become unsustainable, and Trump thinks that he's, finding a way to basically set up a major reset for at least the U.S. and with I guess perhaps little regard to what it does around the world.
It's fascinating to me because I remember sitting down and watching Roger and Me, which was Michael Moore's documentary, where he basically looked at what was happening in Michigan back in I think it was the late 1980s, and how all of these factories were leaving the state of Michigan and going to Mexico. And you think about it, there's really two solutions to that problem. Either A, you tariff the snot out of those countries that are just importing cheap labor, or B, you turn these corporations into welfare queens and you hand them massive subsidies to keep those factories in place, which is essentially how it works today. I mean, you look at any of these automakers in Canada, they're getting huge government subsidies just just to be here. So I think that there probably is somewhat of an argument for that. But then we also look at this idea of how we're just gonna try to make a whole bunch of cuts and try to save the deficit issues through that. And it didn't get very far, did it? Right? Elon, I think, originally said he was gonna do $2 trillion in cuts, and
Right.
he walked it back to 1 trillion, got to, I think the number was 115 billion, which was filled with accounting errors. And now he's somewhat fighting with Trump over Twitter. We're seeing the fallout these last couple days. He's got his brother Kimball on Twitter. I don't know if you've seen that, throwing shade at Trump. He's come out to the media and said how he tried to talk Trump out of doing this tariff policy.
Yes.
And now I kind of look at it and I think, well, how's this going to play out? And ultimately, are we past the point of no return? And what does that mean for the US dollar? And then also the question for guys like us who are gold bugs and silver bugs and love precious metals. And I'm sure if you and I sat down and we broke down our macroeconomic thesis of where the world's heading, it's a place where precious metals are eventually going to play a much bigger role in the monetary system. Do you think that is where this is heading? And do you think that the US dollar is gonna lose its status as the world reserve currency as a result of Trump's actions?
So I do think that where it's heading, look, let's put it this way. There's too much power to give up to willingly allow or intentionally make, gold and or silver. Uh, let's stick with gold because I think that's more realistic for sure. Somehow, as a backing of a currency, I don't think any government is willing to give up the advantages of unbacked fiat currencies. So, but that being said, I do think that we are going down the path that will help fuel much higher precious metals prices because I don't see inflation going away. I see it getting worse. And, there's one thing that was clear when I, started to hear about tariffs. I mean, tariffs are taxes, and taxes on goods make them more expensive. So, that's very inflationary. And so this whole talk of, us likely leading into a stagflationary environment like we had in the 1970s. Well, all the ingredients are there now because with tariffs, we're going to have higher prices and we're going to have less, a less robust economy. We're going to have probably higher unemployment. We're going to have, people are going to rein in their spending. And so we're going to have a struggling economy. GDP is going to shrink and prices will stay high. Now, I think, I wrote a book 3 years ago called The Great Silver Bull, and I talk about this kind of environment in the book. And the whole point is there's this concept called economic or financial repression, and what you do is you keep interest rates below the inflation rate. So this allows a government over time to be able to pay back its debts with inflated dollars, and it's a longish process, but it is a way to deal with, if you do that, you to some extent, slash and burn and cut your expenses the way Elon's been trying to do in the US. Like you said, rightly so. I don't think he's gotten that far. There's a lot of pushback. But if you were able to, have this combination, you would actually be able to sort of right the ship, I think, relatively quickly. And relatively quickly is still a number of years before it would, have enough time to kind of play itself out. But I don't think that there's appetite for that. That's a lot of pain to have to accept, and I really think that we're in an environment where we're going to see inflation return in a pretty big way. We're going to see negative real rates, so that's where inflation is above the rate of return. Before bill, sorry. Rate of inflation is above interest rates, and that's terrible for savers. But they're not gonna. They still don't have much choice, especially if stocks are struggling, and I think that's going to be the case for a while. We've had arguably 40 years of fantastic stock markets from like 1982 until now, over 40 years, in fact. So I think that is the end of that bull market, and so people will probably go with uh, you know. Uh, safer bonds if they're smart, I think shorter term, although the yields will be lower, and and they're still going to be losing money because the inflation rate will be above the rate that they're earning. So it's a sure way to kind of lose money, but I guess there's some assurance in that. There's some security, so to speak. But that's why, you know looking at your options, your investment options, that's why I think, precious metals just make so much sense because traditionally they have very much held up and beaten the inflation rate. And you have arguments for and against, obviously. There are periods where stocks will do better, talking about, maybe a decade or a couple of decades at a time. But you just have to look at the 1970s. Gold was up, I think it was something like 14 times between 1966 and 1982. The Dow and the S&P were flat over that sort of 14-year period. So you have these extended periods where precious metals clearly outperform. And you just have to look at where gold was in 2000, which was about $250. We're more than 10 times up from there. Silver was about $4, so we're almost 10 times there as well. These are long-term trends that I think have not finished playing out, and there's certainly something that people will want to pay attention to and gain exposure to.
Now, I gotta ask about some of the recent noise that's happened on the COMEX recently and I'm not sure if you've been following that, but there was a massive open order at the end of the month when we got that Friday report that there was, I forget the number, but I think it amounted to about what looked like $40 billion of gold that was being asked for delivery, which was a record and had everybody who follows the gold markets very closely on the edge of their seat saying, "What's happening here? Who's this buyer and why do they want delivery?" Lots of questions, and then the COMEX clarified it a couple days later, saying that it was just an error. What do you think happened there? Do you think that there was an error?
No, I don't think there was an error. I think that I think that the error was not taking deliveries more gradually earlier. That was the error. Waiting and wanting to try and do this all in one shot. Um, I think that what we've seen happening with these huge flows of gold and silver from London to New York are very indicative of. I mean, some of it. So there's a couple of arguments. One of the big ones is the obvious one that there was concern about tariffs on these metals. So if someone had to deliver into a contract before a certain deadline, with tariffs potentially having been added to these metals, that they didn't want to get caught offside and have to deliver metals that they didn't have on hand and have to pay this, whatever it might have been, say 20 or 25%. That would obviously sink a bunch of institutions. So they tried to front run it, so to speak, get the metal into the U.S. And have it available. What I find interesting is that you're right. There are these contracts with large amounts that are standing for delivery. I just saw a chart where March deliveries of silver had their second highest ever. If you go back, I'm not sure how far back they track, but the chart that I have goes back to 2007, and it's a clear standout that people are taking physical delivery from the COMEX for their silver and their gold. And this is unlike the Shanghai, for example, futures exchange. This is an exchange that was not set up for physical deliveries. So, I think there's two things happening. One is that it's a question of being able to. There's probably three things happening. There's probably, some of these are participants that want to have the physical metal to offset some shorts. I think that you've got some industrial consumers that want to get the physical in their hands because they need it for a production of all kinds of things, anything from solar panels and EVs all the way to military applications. And um, and then you've got a lot of these deliveries. What I've heard is that, uh, you know, not all of these deliveries are going in and staying in the COMEX. They're actually the metal is flowing to New York, and then it's going into private vaults in the New York area. So, I mean, there's obviously very little information around that, but these are the kinds of things that I'm hearing. And if you look at the London um, inventories. I've got a chart in front of me, and I mean, it's at 10-year lows, and it's dropped off. It dropped off dramatically in 2022, and then it's dropped off again dramatically in the first 3 months of this year. So obviously, the last few months, that's because most of that will have flowed to New York. But London is the largest, has the largest inventories, or still has, I think, the largest inventories of silver. So it's starting to get really, really tight in terms of physical supply, and the exchange for physical premiums on silver have been through the roof. So that means that market participants really, really want to get their hands on physical silver, and they're willing to pay for it. So that really, again, speaks to very much clearly speaks to tightness in the market, and I think it speaks to a little bit of anxiousness. You know, participants really want to have their hands on the physical silver, are uncomfortable with with futures. And yeah, I mean, again, just to kind of summarize it, I think the draining of these secondary inventories, both, where all three, New York, Shanghai, and London, speak to the need for physical to meet demand.
So, where do you think we go from here? I've I've read some stuff online that says that historically, during times of uncertainty when the markets tank, we've got hedge funds that are getting margin called and they start dumping their precious metals position because they need something that's highly liquid. And they often have those positions. And that's kind of where we see that volatility. And is precious metals they have largely held in there relative to the Dow and the S&P. As you spoke about, we're seeing those sort of record low inventories at the LBMA when it comes to silver inventories. So where do we go from here? Is this just we're just gonna have to kind of hold in there, watch precious metals continue to just sort of spring itself like or coil like a spring, as they say, as we wait for the inevitable round of money printing, which will happen because the entire system is debt based, and Trump's about to launch a gigantic hole into GDP that would collapse the economy without money printing. So I think that it's only fair to assume that unless Trump just wants to take down the entire economy, we will see Jerome Powell at some point announce some new quantitative easing program. However, the mechanics work or what terminology they use for it is obviously up for debate or to be seen. But where do you think we go from here? Do you think that silver and gold are back to hitting all time highs by the end of the year?
Oh yeah, I do. I think so. It might even happen before that. I think that right now, we talked about this just a little while ago, but if I think that, the run-up that we saw in the last few months was pricing in the concerns, and there was a premium in there. So I think the market, bought the rumor and then sold the news when the tariffs came out. We saw that the tariffs clearly did not apply to gold and silver, so that some of that premium has gone away, but not all of it. I'm convinced that there it wasn't a huge premium, because you could see now that the metals have not, and gold in particular, has not backed off that much. I think there's some risk of a little bit more downside, especially if you see. I think we're probably due at this point for a bit of a bounce in stocks. I think that I'm not saying that they're more. They're cheap now. I'm just saying that I think that the sell-off was, in fact, it was a bit of a historical sell-off, is what I'm reading, in terms of the degree, um, over the time frame that it took to get that correction in stock prices. So, very much near term technically, I think stocks are due for a bounce over the next few weeks probably. And if we get that, I could certainly see, funds flowing towards stocks and away from precious metals. I think we could see a second smallish leg down in the precious metals. And I think that would make for an absolute perfect opportunity. It's interesting, you hear all these sort of theories and ideas about why Trump's doing what he's doing. And one of them that certainly to me makes some sense is that, if he has let's say, proper or true intentions of trying to sort of right a ship, and knows that the U.S. is on an unsustainable debt path and so on. There are huge amounts of I saw that it was something like $9 trillion of U.S. debt coming due this year, and a large amount again next year. I mean, the U.S. debt is about 36 trillion, so we're talking about a quarter of U.S. debt coming due this year. Um, think about how we are at considerably higher rates than we were, a few years ago. So to have to refinance all that debt at now much higher rates leads to even bigger deficits. So I guess the scenario or the narrative was that Trump was doing this to sort of, quote unquote, seriously pressure markets to get the economy to weaken considerably as well, which would force the Fed to eventually cut rates, which would make refinancing U.S. debt a lot more palatable at much lower rates. So that's one narrative, which, if you think about, has some makes some sense to a fair extent. Um, I just think that, this whole thing with precious metals has a long way to still play out. If you ask someone, 15 years ago, when gold was at, I don't know, let's say, five, six, $700, um, if they could see a time where it was gonna go to 2,000, they thought you were crazy if you said, "Absolutely, it's going to 2,000," and today we're at 3,000. We're 50% above, that kind of level, and yet people are really just only sort of starting to get interested. We've started to see funds really shift and flow into, physically backed precious metals ETFs, which, you know, uh it's interesting. If gold can go from 2,000 to 3,000, and funds will flow out of these ETFs. So it tells you that the appetite was not for the metals, despite there was no chasing in a sense, really. There was no chasing these metals prices higher. What investors were doing was they were chasing stocks. And so I think we're starting to see a big rotation start to happen, especially now that we've had this huge correction. I think the smart money was getting into precious metals because it saw the extreme overvaluations in stocks, and the smart money was in early. And I think now you're going to start to see that trickle down from smart money, to sort of more sophisticated investors, and then you're going to get moved towards this sort of regular informed investors and down to the dumb money, so to speak. And that's going to take a while to play out. And then you're going to have a lot of fear of missing out. And that's when you're going to get these huge run-ups, these I mean, within a few years, we're going to have days where gold is going to be up a couple $100 in a single day, and then and we're going to see, once you see silver take out, I think right now probably the next major important hurdle for silver is about 35 to 37. That's sort of an important quarterly close. That's going to be a big milestone. After that, the clear next upside milestone is going to be $50. After that, we're in uncharted waters, and I think we're going to see some big gaps upward from $50. You can see 70, 80 matter of days or weeks after that. So, you know, these have forever been safe havens. They're still, in many ways, on many metrics, relatively cheap. And so, I think that there's a lot of runway left in both metals. People just need to start to have at least some kind of exposure.
All right. Well, Peter, thanks very much for hopping on here. Our audience always loves when you do this. I think that we've got just a great decade ahead. So I'm looking forward to all the chats we're going to have in the future as we see precious metals start to really move. And I fully agree with you. We're going to see those days where gold rips a couple $100, and there's going to be some great days. There's going to be some not so great days, but I think we can agree it's going to be volatile, but upwards to the right. And I appreciate that you always take the time to sit down and chat with us, and let's do this again soon.
Looking forward to it, Steve. Thank you so much, and it's always fun.
All right, everybody. Thank you for watching. If you enjoyed this interview, please smash that like button, subscribe, and ring that notification bell. Also, guys, let me know what you think of the comment section. Thanks for watching, everyone.